Hi folks, in this topic we'll be talking about intraday exit strategy. Uh, I think I have already mentioned that some of the folks who are safe or who are doing intraday trading, you can decide that okay, at 3:45 every day, I will probably close all my long positions as well as short positions, right? So that's one way to do a look at it. Here it is slightly different here. So what we are saying is in the previous case, when we are doing intraday strategies with the timing, you can let the algorithm know that I want to get out of all my trades and liquidate all my positions at around 3:45. But now here you are probably doing something little different, which I will explain to you. So this is something which we discussed earlier, and now we are not going to discuss on this. What we are going to talk about is sometimes in quantitative trading, as I have told you earlier, that there are no human emotions, right? So there's nothing as being greedy or anything. It's all mathematical. So you can tell the algorithm that, you know what, if I can make 0.05% of my daily profit at any given time, it could be at 10 o'clock in the morning, it could be at 11:30 or 2 o'clock in the afternoon. As soon as I make 0.05% exit out, it means close all the positions. So you are done for the day. So if you take that as a basis, then maybe annually you are looking at around 12.6%, taking 252 trading days in a year. You can continue fine tuning your list and so on and so forth as to everything what I said, and probably then target for 0.08%. At that point, this is 0.8%. So at that point, what you're looking at is almost 201%, I mean 200% return. So this will be very aggressive, but when you start from zero point 0.5, which is basically around getting you around 126 you call percent a year, which is a lot, you can then target for something like zero point 0.6. You try to accomplish that. Make sure that your list is getting you that 9 to 1 ratio when it comes to win and loss. It's taking a clock here. So anyway, so the point I'm trying to make it has to, once you get into 9:1 ratio, you may be thinking in terms of as you are increasing your cash balances and gradually getting into leverage and so on and so forth, you optimize that area to get a very decent return. And then after that, you start concentrating on your, this is mainly for intraday, as I said, you start concentrating on 0.65 as a target. So you are reaching around 163% a year. So you start small. You start from point, say, zero point 0.03 as a start. And then as you master the skill, go to point, say, 0.06 as a target and see if you can get this type of a 15% return. If you accomplish this from your list, as I said, you might be on initially in that ratio, say 7:3. So your focus would be that how do I get to 9:1? Out of every 10 trades, I win on 9 and I lose 1. So once you accomplish this target, then you see that, okay, what is your return here? So that means you make your the conditions which I mentioned earlier, your moving averages and all those things little bit more tighter, from maybe a list of say 200 stocks, you now move to say 450 stocks to get more opportunities. So gradually over the time, as you start building up your mathematical models, which is, say for example, you are happy with a model, you're running it in real time, my recommendation would be don't do anything in real time. You come back to a simulated and start working on these type of changes and see what type of a return you're getting from that simulation again. and let it run for a few days, and then you move that same configuration into real account. So by doing this, you will gradually improve your return. So this is one of the technique. In order to overcome emotions, you target for a daily profit, and as soon as the algorithm hits this particular profit level, it'll exit out, which means it is giving you roughly around 15% a year. Then you go to your next target, 0.09 as an example, and you start seeing if you can get 22% a year. And for that, you might have to look at your list to get good ratios. You might have to look into the market conditions as to exactly at what point you need to get in. You have to look into your individual stocks as to what should be the lagging indicator for the moving average, whether you should follow 315 or MA 210 or MA 2 to 15, whatever is your fact finding in terms of the spike happening. You need to grab that and continue using that mathematical model to continue grabbing those spike. It may happen that you are not getting a lot of it. In that case, you increase your list from say 100 stocks to probably 350 stocks. So that you are getting the same type of configurations but with lot more opportunities. So having said that, this is the way how you can get optimized and continue building your optimization technique to get better and better return, considering all what I spoke about in last few videos. So thanks for now.